All right, welcome to Version Wick Theory 3.0. In this video, we'll go over how this model can make you $6,000 a month from a single 50K funded account. I'm going to go over a full strategy breakdown and overview with a bunch of examples, a million examples. I'll also go over some backtest data, just some proof that it works, and we'll also share some indicators to make your life a lot easier when executing this strategy. So a super quick overview of the strategy. Here's a bullish example. So it is simply a break and retest and continuation model, like in many other models out there, just with its own little details. So we start with virgin wicks, which is any wick that is untouched. So any wick, if you draw a line to the right, like this one, it has not been touched at all, that is a virgin wick. You wait for it to get closed through by a Chad candle, in this case a bullish Chad candle, because this is a bullish example. Then you drop down to the 1 minute time frame from the 1 hour. You look for price to trade below the bullish point of interest, which was created by our virgin wick level, if I didn't mention. You also want to see price trade into a fair value gap, then present either an inverse fair value gap, which is what we've been trading for a while, but most recently what I've also added is a change in state of delivery as a entry model function. So now we've got two ways to enter the trade once the virgin wick point of interest has been confirmed and the higher time frame fair value gap has been confirmed. Yeah, that is the strategy in a nutshell, but I'll go over this with a full breakdown of take profit, stop loss rules and everything in my Trading Bible, which I'll go over. But the main thing we are updating in version 3.0 is just adding the change in state of delivery, or CISD entry model. And it's, yeah, let me just say it's extremely fucking powerful, as you will see. So real quick, what is a change in state of delivery? So the way I understand it is you start with a swing low. What is a swing low? So let's look at this one. A swing low is defined by a 3 candle pattern where the candle in the middle, which is the one we're looking at now, has a wick that is lower than the wicks of the candles next to it. So if you look at this one and this one, this middle candle has the lowest wick. That is defined as a swing low. So you want to wait for that swing low to get taken out. As you can see here, it gets taken out by this red candle. And so I define this, whatever takes it out, as the leg that took liquidity. And your CISD level is simply the opening of that leg that took liquidity. So there. Opposite for a bearish setup. So here is your swing high here, this red candle here. As you can see, that middle wick is the highest wick compared to the wicks, the 2 wicks next to it. And so that gets taken out by this bullish black candle here. So this is your leg that took liquidity. Sometimes it's consecutive. In this case, it's a single candle. So you want to look at the opening price of that candle. There is your CISD level that needs to be closed through for a confirmed CISD. Let's see if this one, okay. A bit blurry, but shout out to Google Images. Okay, where is the last swing low before the CISD? So I'd say this one. Let's say this green candle has the lowest wick. It's lower than the one next to it and the one next to it, even though it's kind of hard to tell, but let's say it is. That gets taken out by this leg of consecutive red candles. So you want to look at the opening price of the leg that took that liquidity. So here, this one. There's your CISD level. Okay, yeah, maybe this will help as well. So, should I zoom out? Yeah. So your key level is your swing low. So this one here, this red candle has a wick that is lower than the wicks next to it. So that is a swing low. This swing low gets taken out by these consecutive 3 red candles. And since they are consecutive, you want to look at the opening price of the highest one. The candle that started the most recent downtrend. Yes, so here, there is your CISD level. And if a candle closes above that level, that is a confirmed change in state of delivery. And why am I using this? So yeah, I recently backtested this. Over the weekend I did, don't worry about these. I did 100 trades over January, like current January, and December last year on both gold and NQ. So yeah, it was about 100 trades all up, and here are the results. This is taking only CISD entries with my model, so not including IFEGs, because I just wanted to figure out if CISDs are profitable. I already know IFEGs work and they're profitable, but I was just looking for something else I can add just to give me more entries, because sometimes the model will play out. You will get a bounce off the POI and the FEGs, but there's no IFEG. So I just wanted another confirmation to get in. And yeah, results are looking very good, very good. So total of, what's that, 102 trades, 54 wins, 48 losses, 53% win rate, total profit of 58R. Very nice. And an expected R per trade of 0.57R. Yeah, these are the most important stats, but here I also broke it down by December and January. January being slightly better, but overall both still really good. I also broke it down by gold and NQ. Pretty much exactly the same, so you can trade either one. You can also trade ES since it's correlated with NQ, but I just tested NQ. But yeah, this is, some may say 100 trades is not enough, but for me personally, I find it's enough, and I've seen the model play out successfully enough so many times that I just know deep down it works. I've seen it play out many, many times. It's so clear to me. Like, it couldn't be any more clear. So I'm officially adding it to my trading model and my trading Bible, which I will go over. All right, so here's what the trading Bible looks like. If you don't know what it is, it's my, essentially, yeah, everything around my model. So like what the strategy is, how to enter a trade, how to put your stop loss and take profits, certain rules, what the process looks like, a bunch of examples. So it's pretty much got everything you need to trade this model. But I'll just go over what it looks like in the latest version. So version 3, I just added, as you know, changed in state of delivery as an additional entry model and the rules around that. I added a maximum amount of trading sessions and added a new section called entering the trade, but we'll go over those. Okay, so it's still just trading NQ, ES, and gold. Yeah, all the standard kill zones. So these are in New York time, Asia 8 to 12, London 2 to 5, New York AM 8 to 11. You can trade PM as well, but I didn't put it here because I never trade PM. That's my sleeping time. But I also added this, choose 1 to 2 max for mental health / lifestyle reasons, because yeah, for a bit I was trying to trade all 3 sessions and it's just too much screen time. Like, you don't want to be staring at the charts that much. It's just not good for you and you don't perform as well. So choose 1 to 2 to actually just lock in. And I think it'll be better that way. But yeah, here's like a written version of the strategy. So wait for hourly candle. Actually, yeah, I've got my chart up here because we'll actually go through an example while looking at the Bible, just so we can see how it plays out. I think that would be helpful. So, okay, so let's go to this example. We've got this 3 AM candle closing strongly through this 2 AM Virgin wick, creating a bullish point of interest. See? Virgin wick then becomes a bullish point of interest. Then you drop down to the 1 minute and look for price to engage the POI by trading below it. Okay, let's drop down to the 1 minute. All right. Let's see. Okay, price has traded into the point of interest, as the Bible says. Then wait for a confirmed bullish IFVG or CISD. Okay. Let's see. Ah, there's a CISD. Okay, you may have missed it because you may not quite yet understand how to detect a CISD, but here is your swing low that gets taken out. A swing low is defined by a 3 candle pattern where the middle candle wick is lower than the other 2. So it sticks out. So that's your swing low that gets swept. So where is the leg that took that liquidity? This one. And the opening price of the highest candle. There's your CISD. Alright, and price must be within a high time frame fair value gap or recently engaged with high time frame fair value gap. Yes, correct. There is a 5-minute gap there. So yeah, this looks exactly like this. Right, we had a strong hourly close through a virgin wick, and then you drop down to the 1-minute time frame. Price slowly comes down into the POI and high time fair value gap, and then presents our entry model. Perfect. And then we get to the entering the trade section. So for a CISD, limit order will be at the CISD level. Okay, so let's go back there. Let's actually go back here. So your long would be here, over there, and then for take profit and stop loss, CISD SL will always be at the swing high or swing low. Okay, let's go there. And then TP is the obvious draw on liquidity, or 2R if draw on liquidity is more than 2R away. So I would say there is your draw. There's some stacked equal highs there. So let's see if we can target that. Yep, that's 2.45. So we will have to pull it back a bit to 2R. Everything else, same as always if you've been following. No partials, no moving stop loss, no trailing. Except for a manual close when conflicting POIs are created. So if this was towards the end of the hour and then bearish point of interest were created, I would manually close the trade if we are still in it. But besides that, trade remains open. Risk 10% of available drawdown. And yeah, that was all the rules around entering and exiting. So let's see this play out. You get tagged in there and straight to TP. Very nice. Beautiful. And then here I've also got a bunch of rules, but if you've been following, you should already know these. Only trade within your kill zones, wait for POI to get engaged, high time frame, fair value gap engaged. If price already delivers off the POI to the drawn liquidity, I will not consider it anymore. For me, I would consider that the powers have already been used, and so you cannot use the POI after that anymore. 1.5 R minimum, 2 R maximum, always target drawn liquidity, can't target empty space. Trading process, we kind of already went over that. You mark off your virgin wick to point of interest levels at the start of each hour, or you can use indicators, which I'll get into. Then you mark off your FVGs, or you can use indicators, wait for price to engage with both of those, and then you wait for your entry model and make sure the rules have not been breached. Then you set your order as stated above. And lastly, very, very important, do not fuck with the trade. Just walk away, close the charts if you have to, log out of your laptop, log out of TradingView, and just let it play out, because once you know the model works, the only way you can fuck it up is by fucking it up yourself. Just like micromanaging it, taking partials, closing early, moving your stop loss, all the typical shit we do with poor psychology. So last step, very important. Yeah, I'll just go over this exact same example, but what it looks like with indicators, because I feel like it makes it a lot easier. So, all right, let's get rid of these. Let's just go back to the start of the hour. I'll turn on my CCT and CSD. Okay. So the hourly chart is printed on the right here, even though we're on the 1 minute chart, and the POI has been printed on the chart for me using this CCT indicator. And we'll also see our 5 minute gaps there. I don't know if I had that on before, but whatever. And our CISD indicator will show us when there is a confirmed change in state of delivery. Bang, there you go. So super simple, everything's there, you don't have to mark anything off, you simply just set your limit order there and you make some money. Very simple. Bang. Nice. Yeah, there's also a bunch of examples here. So if I haven't mentioned it, I will leave this below. You guys can check it out in your own time. Look through a bunch of examples just so you can see the whole process and study it yourself. But I'll go over some real examples right now, just so you can get a better feel for the model and how it works. All right, I'll do a few without any indicators first, or minimal indicators, just so you get a better understanding of how the model works and how it all comes together. Then I'll do a couple with indicators so you can see how much easier they can make your life if you want to use them. So, all right, we've got this 9 p.m. candle closing bearishly through this virgin wick, creating your bullish point of interest there. So from 10 p.m. we can go down to the 1 minute and look for our model to present itself. So POI has been engaged. We do tap into a 5 minute gap as well. Nothing there yet though. So here's your liquidity sweep. And so here would be your CISD level. So let me just mark that. You can put your entry there, put your stop at that high, targeting these lows down here. 1.8 R. And it takes a while, but you do get it. Nice. All right, next one. So we've got this 8 a.m. candle closing strongly through this virgin wick, this one, this one, this one. Quite a lot here. Yeah, that's it. So these are your bullish points of interest where we want to look for longs. So from 9 a.m. you can drop down to the 1 minute time frame. Look for POIs to get engaged along with higher time frame fair value gaps. So there you can see our gaps. Bang. They have been engaged, but no CISD yet. Okay, so here is our stop hunt. This is a swing low that got taken out. Looks like we have another swing low taken out. So in the leg that took the most recent swing low, looks like you get an IFEG as well, but for the sake of learning CISD, let's ignore that. This is the leg that took the liquidity. I know it's small, but this is the leg. And so the lowest closing down candle is this. So you want to look at the opening price of this because there are no consecutive candles. So that is your CISD level. So you can put your entry here. Stop at that low, targeting 2R. Yeah, you get it easy. In like 3 candles. Nice. All right, so we've got this 8 p.m. candle closing strongly through this virgin wick, creating your bullish point of interest. And then from 9 p.m., drop down to the 1 minute time frame and see if it gets engaged. Let's also mark out. Let's go on our 5 minute. See if there's any gaps. So there's a 5 minute FEG there. There's one here as well. And yeah, 15 minute gap there as well. All right, let's go back to the 1 minute. So we've got our POI, we've got our fair value gaps. So we just need to wait for them to get engaged, followed by a CISD. Bang. Okay. So we've got a swing low here that gets taken out. So at this point, our CISD level would be there, but we don't get it. So let's see if another swing low gets taken out. Okay, this swing low gets taken out. And so this is the leg that took that liquidity. So this would be your CISD level. But no, we get another stop hunt. So this liquidity now gets taken out. See, low. And then what is the leg that's the liquidity? It would be from all the way from here to here. So we want to look at the lowest down closing candle, which is this one. And if it's consecutive, look at the consecutive candles it connects with, and the high and the opening of the highest one. So there is your CISD. I can even throw this on my indicator on, and bang, yeah, it confirms it as well. It's here. Yeah, so this would be your entry. You would get tagged in. So this is where it's confirmed because you finally close above the CSD level. And then let's see where we actually get tagged in. Yeah, boom, we get tagged in here. Stop is at the lows, so still in the play, and then targeting 2R. Bang, very nice. Beautiful. All right, let's do one on gold now. Still no indicators, just so we can understand the model. So we've got this 2 a.m. candle closing strongly through this virgin wick, creating your bullish point of interest. Let's also mark off our hourly FVG here as well. Let's see if there's any on the 15. Oh yeah, nice 15-minute gap there as well. And here. So, looks like everything is there. Everything's set up nicely. There's a 5-minute there as well, but we don't need to mark that because the 15th's there. Nice little 5-minute gap here as well. Yeah, so plenty of confluences. All right, let's go to the 1 minute and see from 3 a.m. if the model presents itself. All right, bang, tapped into FVG. So the last swing low that got taken out was this one, or this one. So here is your current CISD level. But we're definitely not going to take that. So let's wait for another low to be taken out. Bang. This low gets taken out. No CISD yet. All right, so we get another stop hunt, or a liquidity hunt, or liquidity raid, whatever you want to call it, which is defined by this swing low. If I didn't explain it already, a swing low is simply a 3-candle pattern where the candle in the middle, the wick is lower than the wick of the 2 wicks next to it. Like for example, this is a swing low because this wick is lower than the wicks of the other wicks next to it. So it's a simple 3-candle pattern, like this for example. Low, and then the other 2 next to it are above it. Very simple. So this swing low gets taken out. What is the leg that took that liquidity? Well, it's this leg here. And it's all consecutive candles. So we want to look at the highest one and the opening of that level. So here is your CISD level. And it gets closed strongly through by this candle. So then that is when you can set your order, stop at the low, targeting a nice 2R. And let's see it play out. There you go, very nice. All right, so in this one, I want to go over an example where everything lines up perfectly. So all confluences and the entry model, but you just don't get tagged in, and that's okay. We just have to live with that. So we have these bearish points of interest. Let's see if we have any gaps. So we do have a 15-minute gap here. Five-minute FVG here as well. All right, let's go down to the 1 minute. And let's see. Okay, FVGs and POIs have been engaged. Now we're just looking for a CISD. All right, so it might be a bit hard to see, but after a while you will develop an eye for it. So this is a swing high. As we know, swing high is a 3-candle pattern defined by the middle candle having the highest wick and the 2 wicks below, next to it are below this wick. So that's a swing high. Whereas like this is not a swing high because the one next to it is higher. So there's your swing high. It gets taken out by this leg. So these 2 purple candles, that is your leg that took the liquidity. And so since it is consecutive candles, we want to look at the opening of the lowest candle, so this one. If it was not consecutive, so if this was black for whatever reason, then it would just be this one. This would be a CISD level right here. But here it is. There is your change in state of delivery. So all confluences have been met. All criteria have been met. There is your confirmed CISD. So you can put your limit order here at the CISD level, stop at these highs. You can target these lows. 2R. But like I said, this is one of those examples where you just don't get tagged in. And price absolutely dumps way down without you. But that's all right. It's better to be safe instead of chasing the entry, especially with CISD, I find. With IFVGs, it's a bit different. I find that you can just enter as soon as the IFVG, you can enter at the level that the IFVG is confirmed. But yeah, just wanted to show this example, even though it's not a winning trade. All right, now I want to show a few examples of just how easy it can be with indicators. So if you felt like the whole process was really long and you're going to mark up a lot of stuff, I agree, which is why I like indicators. So, okay, so let's say we're here at the start of the 4 a.m. candle. Hold on. All right, hopefully you can't hear that in the background. Anyways, all right, so let's say we're here. Let me turn on my CCT indicator. Shout out to Master Chi. Okay, so bang, my indicator shows me the 1 hour chart. So I don't have to switch back and forth between the 1 hour and the 1 minute. This literally just shows what's happening on the 1 hour. And it's also, what it's also done is, it's shown that this virgin wick here has been closed by this massive Chad candle, creating this bullish point of interest. It has marked it on the chart for me. So I don't have to do any of that. Next, you can also use this FVG by nephew Sam, or you can use this IFVG one Pro Toolkit, and this will help mark off the FVGs, as you can see there. So let's let this hour play out. And then another thing is, if you are not yet comfortable or you don't quite understand change in state of deliveries, you can use this one, CISD by TNCYLYV, whatever his name is. And it will show you when there's a confirmed CISD. I don't really like using it when I'm actually trading because it's a bit cluttered. Like, it just shows everywhere. And I'm pretty comfortable spotting it with my eye now. But sometimes I like to turn it on just to double check that I've got it correct. But yeah, like you'll see right there, price tapped into this 5-minute gap, engaged the POI. So here is your stop hunt. So that is a swing low that got taken out. So then it got taken out by these consecutive black candles. So the opening of the highest one, there is your CISD. But yeah, indicator marks it out nicely for us. So then you can put your entry at that CISD level, stop at the low, targeting these highs. But of course, I like to stop it at 2R. Bang, there you go. Very nice. And yeah, the indicators will always be linked in the thingo down below. So you can just click on the link and add it to your own chart for people always asking. All right, so next example. So we've got this strong bearish candle closing through this virgin wick, and you can see our bearish point of interest here. Then we've also got a 15-minute gap here and a 5-minute gap here. The 15-minute gap is enough for me, but I would like to see us tap into that 5-minute gap as well. That would be super nice. So, all right, let's see. PY gets engaged. No CISD yet. Okay, so we have a confirmed CISD, but I would like to see us tap into that 5-minute gap first. Okay, bang, there we go. And so we've tapped into that gap, and where's our last stop hunt? So I would say this is the last swing high that got taken out by this leg. And so this individual candle, there's no consecutive candles. This is the highest closing up candle. So you want to look at the opening price of it, which is there. There's your CISD, and indicator shows that is correct. Yeah, it's a bit cluttered. Sometimes I don't like it. I'll just do it myself, just like that. Bang. So here is your entry, and then stop at the high, targeting 2R. So we get tagged in here, and boom, there you go. Very nice. Yeah, so those are all the examples I had. That's the whole model. That's everything you need. Hopefully it all makes sense, and hopefully you find some results with it. I mean, just looking at the data, it looks pretty impressive to me. So let's just round this up to 60. Plus 60R in less than 2 months. That sounds pretty fucking amazing to me. Just to put it in perspective, let's say you have a 50K Lucid Flex account. You can pick this up for like, I don't know. You can use my link in the description and you get a discount, like 30% off. I think it might be like $80 or something right now. Yeah, super cheap. I don't know why it's saying that. 80, I don't know what it is. You can check it. But yeah, use my code, you get a discount. And let's say you're risking 200 risk per trade. So 200 times 60 equals, what's that, 3,000, is that $3,000? 60 times 200. $12,000. Okay, wow, okay. That's $12,000 in 2 months. 6K in 1 month from one 50K account. So, I mean, yeah, what more do I need to say? I think we'll leave it there.